Okay. Good morning, everyone. Happy New Year. My name is Adebayo Desalu. I will be your second facilitator for this online classes that is on advanced audit and assurance. Uh, the topic we'll be discussing today is chapter 1, which is the meaning of audit and assurance. That's chapter 1. Yesterday, I believe that you had a wonderful session with the topic that was discussed yesterday. Today, we are continuing in that lecture series, and today we are starting with the first chapter of your ICANN study text, which is the meaning of audit and assurance. I want to believe that everybody can hear me. Can you all hear me, please?
Yes, sir. Can hear you.
Okay, thank you. All right, thank you very much. Okay, so let's start. Now, welcome to Equity Professional. Now, let's start with what do you understand by assurance? Assurance is in English, literally, what it means is confidence, right? So when somebody say that, give me the assurance that what information you are giving me is authentic. That is the confidence. Give me the what is the assurance that what you are saying is correct. That's what it means by confidence. That means you are double sure of. That means you are double sure of whatever the information or whatever activity you are embarking on or you are embarked on. Now, let's bring it to audit. Now, I need to say that for us as students writing professional exams, that is the advanced and assurance, it is highly important that you speak in the language of an auditor. All right. The auditor I'm talking about here is speaking like an external auditor. If you don't speak in that language, I'm telling you, it might have some effect or negative impact on your performance during the exam. And that is why you see me, I'm taking time to explain some of these things. Okay. Now, when you talk about assurance engagement, what it means is, first of all, you need to understand one thing. Assurance engagement is broad, is it comprises of audit. Okay, so in assurance engagement, you have audit. So what I'm trying to say is that audit is a type of assurance engagement. You need to understand that, first of all. All right, so that's why you are starting with assurance engagement. So assurance engagement is an engagement where a practitioner, where a practitioner expresses a conclusion, okay, designed to enhance the degree of confidence of the intended users other than the responsible party, okay, about the outcome of the evaluation or measurement of a subject matter against criteria. And let me break this down for us so that we understand it. When you say that an assurance engagement, what we mean here is that for you to conduct or to perform an assurance engagement, you need a practitioner. So when you're talking about assurance engagement, do not mince word and go and say an auditor. If you use an auditor when you're talking about assurance engagement, what that means is that you have limited the activity or the scope of that person. So when you say somebody is a practitioner, that person has a broader or a wider scope of coverage than an auditor. Okay, so that what you need to understand. So you can see I'm choosing my words carefully. So in an assurance engagement, you don't call the person doing it is someone that has been engaged. Okay, to do what? To express a conclusion. Okay, designed to enhance the degree of confidence of the intended user. The degree of confidence of what? Who are the intended users? Who are going to rely on the information or the report that will be provided or presented by the practitioner. Okay? So what the practitioner does is that he's going to examine. is going to evaluate, okay, the work that has been done by the responsible party. Who is the responsible party? The responsible party is usually the management and those charged with governance. Management and those charged with governance. That is the management and the board, okay? Board of directors, okay? So remember in your CSME, when you are at the skills level, you learn about those charged with governance. So I don't need to waste time on that. So what happened is that this is the scenario of how it's done. The practitioner will be engaged, right? Because the owners of the business or the owner of the entity or the company or the organization, some of them do not have the expertise, okay, to know, to be able to evaluate accurately the people that they have employed to do the work, to carry out the work for them, to carry out the work for them. What would they do? They are going to rely on an information that will be provided by another person, and that person is a practitioner. Okay, so the practitioner is working based on the directives given by the shareholders, the owners of the business. Okay, because they want to be sure that those people that have been engaged to carry out the work for them on their behalf, are they doing it in the company's interest or in their own selfish personal interest? You know, those people that have been employed, you never see it, they will never display it. But the only way you can know, the only way you can dictate whether they are doing it for their selfish interest or for the interest of the organization is when you hire a competent person to carry out an evaluation of what they have been doing. That is only when you can examine and say, oh, these people they are doing things in the interest of the owners of the organization. So that is where it comes in. So when you talk about assurance engagement, we are talking about an activity, okay, does what? That enhance the degree of confidence so that the owners of the business will be relaxed and say that, okay, that means the people that are at the helm of affairs, people that are steering the affairs of our company, they are competent and they are not dubious. So they have that what? That confidence, okay? So how would they have that confidence? Because the person that has been um, directed or appointed to carry out the evaluation of the responsible party, that is the management and the board of directors, is independent of the responsible party. It doesn't report to them. He works with them, but it does not report to them. So they are going to rely on that information that is presented by the responsible party. So what will the practitioner do? Practitioner has a yardstick, okay? He has a means of measurement. He has a means of evaluating whether the organization is being run in a proper manner or not. So he's going to he's going to collate all the information presented by the responsible party, right? And is going to weigh it on that evaluation criteria. So if he passes the evaluation criteria, then he will report back to the shareholders or the owner of the business that they should not need to lose any sleep, that their business is in proper control. I hope you are getting it. So that is so all those reports, all those information furnished by the responsible party are what the practitioner will put on the evaluation scale or criteria or yardstick. So if he passes it, he will now give a verdict that the company is properly managed. That is what we do. That is what that's the meaning of assurance engagement. I hope it's clear. So why did I say an assurance practitioner is broader, he has a broader scope than an auditor? When you say somebody is a practitioner, that person can do more than what the external auditor can do. It's capable of doing more than what the external auditor can do. Is likened to what you learned in your audit and assurance class at your skills level. When you talk about an expert, you can liken a practitioner to an expert. Who is an expert? Can anybody in the house explain to us who an expert is? Anybody in the house, explain to us who an expert is, because this is supposed to be a contributory class, not a mono dialogue class. Can anybody help with your understanding of an expert in line with audit, not the general meaning of expert in English? Describe an expert in line with audit. Who can do that? Can anybody do that? Do you have anybody in the house that can do that? Because of our time, I don't want to waste much time. Let me explain it, okay? Now, an expert, according to ISA 620, an expert is someone that has competence in other fields outside accounting and audit. That is an expert. I take it again. An expert is someone that has competence in other fields outside accounting and audit. So what does that imply? That implies that for you to be a practitioner, for you to be an expert, you will have other areas of competence outside accounting and auditing. So examples of expert or practitioner here, we are looking at surveyors, architects, engineers, right? Risk management consultants, right? IT consultants, and much more. Okay. So all these people, estate valuers, all these people I've mentioned, they are considered as practitioners, inclusive of the auditor too. Do you understand? But what I'm trying to say is that when you are looking at assurance engagement, do not be fixated on the fact that it must be an auditor. That is why I use the broader terminology, which is what? A practitioner. I hope that is clear. So, like I said, that is what the practitioner does. So, he's going to be engaged by the owners of the business, okay, to to evaluate everything that has to do with that organization and present a report. That report is where it's going to contain is what? His opinion. What is his own opinion, professional opinion about the work of those that are in charge of the organization. Okay? That's what we mean by assurance engagement. I hope it's clear. All right. I'll still talk more about that. So I've talked about the report, right? Now, an example of an assurance engagement is a statutory audit. You know, I said that auditors too, external auditors too, they are part of the practitioner. Okay, so it's statutory audit. So in statutory audit, it provides an assurance about the quality of the information. It makes financial statement more reliable for the user as credibility is added to the statement by the express opinion of the auditor. You know, there is what we call auditor's opinion in an auditor's report. When the auditor concludes his audit engagement, he's going to write a report, right? That report contains his opinion, where it's going to say that whether the financial statement shows a true and fair view or not, or whether the financial statement present fairly in all material respects. Okay, it's going to state that. Okay. Now, what you also need to understand is that there are other types of assurance engagement which we are going to be looking at. Is not only auditing or auditing financial statements. There are other ones. We're going to look at that. Other examples of assurance engagement, we have the report on risk assessment. It's an example of assurance engagement. Okay? When the organization decides to carry out an evaluation of the risk exposure of the organization, okay? They want to understand whether the company is exposed to risk or not. They carry out a risk assessment. When they do that, is another type of what? Assurance engagement. Okay? When they carry out a report on the IT security or infrastructure of an organization, is also another type of assurance engagement. Because you want to be sure that your IT infrastructure is secured enough to ward off any form of what? Cyber attacks. All right, that's another one. All right, there are other examples we are going to see in the course of this lecture. I just need to give us uh, these few. Okay, does anybody have any question? Does anybody have any question? Does anybody have any question, comment, observation before we proceed? Is there any question, comment, observation? Are we together? Okay, since there is no question, I want to believe that everybody is following. So let's continue. Let's look at elements of an assurance engagement. For you to say an engagement, for you to say an engagement is an assurance engagement, what are those things that must be present? That's what we mean, elements. It can also be attributes. It can also be characteristics. Anyone they use, whether they call it elements, whether they call it attributes, whether they call it characteristics, okay, of assurance engagement. You are practically saying the same thing. So, like I always make my students to be able to comprehend fast, I have a mnemonics. Okay, I've carved out a mnemonics. Okay, for this particular aspect, this section, which we are going into now. What is a mnemonics? Mnemonics is just a form of learning that makes learning to be what? To be faster and easily understood. If you go to nursery schools, they use it a lot. That's why you see that you see a child that is under 5, a toddler, you see the child can recite all the 36 states and capital in Nigeria. Okay, why is he able to do that? If you ask the child to read it, I mean to state it one after the other, and I can believe, I can attest to the fact that at some point the child will be lost in the moment. Okay, but because they have turn it into a form of what? Like a poem, like music, like rhyme. So as he or she is singing, it makes the learning to be what? To be accelerated. So the same thing I'm going to use for this, okay? Because I don't want us to have any reason to cram anything in audit. Once you understand it, once you have the basic understand, basic knowledge, I want to know that it's going to be a walkover for every one of us. Okay. So the mnemonics for elements of assurance engagement, they are what I mean by that is that when you talk about assurance engagement, you only have 5 elements. There must be 5 basic elements. If the 5 basic elements not complete, you don't have an assurance engagement. So the 5 elements must be complete. And the 5 elements have been um, structured or have designed it as in the form of mnemonics to be, and it has been carved as what? Crest. 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 That is the mnemonics. Crest is an abbreviation for the 5 elements in an assurance engagement that must be present. Okay. Now, what you have in this your material that I've shared with us is not arranged in that order, but because if it's arranged in that order, sometimes it might be clumsy. You understand? So to make it easier, I've given you that mnemonics as what? Crest. CREST. Okay. So let's now look at them one after the other. The first one, the C there, talking about what? Criteria. Criteria. What is the criteria? Criteria is a unit or a form or an acceptable way of measurement. All right? A criteria is what? An acceptable way of what? Measurement. It has been proven all over the world, globally, that is the measurement. For instance, now, if you talk about measurement of a land, a plot of land, an acre of land, an hectare of land, whether Nigeria or in diaspora, it's the same measurements that you are talking about. What do I mean? Now, an acre of land is 6 plots, right? So whether you go to Saudi, you go to Jerusalem, you go to US, you go to Moscow, an acre of land is 6 plots over everywhere. That's what I mean. Okay? It has been universally accepted as a what? As a means of what? Measurement. So when a practitioner is looking into the affairs or into the activity of the organization, he is going to use a standard measurement, a standard evaluation tool to put everything about the organization on that evaluation tool and see whether it will pass or it will fail. And that evaluation tool is globally recognized and accepted. That's what we mean by a criteria. That is the C. The second one is the report, which is the R. At the end of an engagement, assurance engagement, the practitioner is expected to write a report. The practitioner is expected to do what? To write a report. For instance, you have hired an architect to come and help to review your building that you are trying to construct. At the end of the day, it's going to come up with a report. And I want to be that some of us know this report because we have done some of those things while we are at the elementary stage of our maybe studying accounting or early stage of writing ICANN during the 8 years. There's what we call contract account. Okay, there's what we call architect certificate of completion in contract account. What that means is that if you ask an accountant, go and value a building, right? Accountants were not trained how to value a building. What we are trained is on Naira and Kobo. So what that means is that the accountant will rely on the services or the expertise of somebody like an architect. They're able to look at a building and say that this building, because they have not completed it, they have not painted, they have not roofed it, they are just done it to name, right? This is the worth of this building. That is the work of an architect. That's the work of a valuer. That's the work of a surveyor. But an accountant cannot do that. Do you understand? So he's going to write a report. And that report, because he's an authority in that aspect, his report will be what? Will be taken as what? A source of what? Information that can boost the confidence of the intended users. I hope you are getting that is the R. The E there is evidence. The E there is what? Evidence. Evidence means any information gathered by the practitioner during the engagement, any information gathered by the practitioner during the engagement, right, that can influence his report, that can influence his report and opinion is what we know as what evidence. So anything he gathers during the engagement that contributes in making his overall opinion about the engagement is what we call what? Evidence. The next one is S, subject matter. What is subject matter? Now, subject matter, like I said, I don't want us to be fixated on only financial scenario because when you're talking about a practitioner, I said the scope is broader. All right. Now, in subject matter refers to any information, report, document furnished by the responsible party. Any information, report, or document furnished by the responsible party. That is any information that the management, the board of directors present as requested by the practitioner is what we call the subject matter. So it's not limited to only financial statements. You'll see that in the course of the lecture. All right? I hope it's clear. Okay, so let's go on. That is the S. The last one is the T, which is three-party relationship. Three-party relationship. What's going on three-party relationship? That means three party must be present in an assurance engagement. Who are the three party? You have the practitioner, you have the responsible party, and you have the intended users. Okay. So who is the uh, who is the practitioner? The practitioner is the person in charge of the engagement, is the person carrying out the assurance engagement. That is the practitioner. Okay? Who is the responsible party? The responsible party is the management and the board of directors. Okay? And those ones, they are report in terms of providing information, which is the subject matter. Then you have the intended users. Who is the intended users? Who are the intended users? Now, the intended users are those people that will rely on the information provided by the practitioner. If they are going to utilize the information provided by the practitioner, they are the ones we call the intended users. Examples, you have the government. Okay, government is an intended user. Why? Because government is going to generate tax revenue from the organization because they are expected to pay tax. Okay, they are intended users. Banks. So if the organization goes to the needs credit and they want to go to the bank to get credit, the bank will request for their financial statement to be able to know how much they are capable of getting. Another example, we have the debtors, we have the creditors, we have the suppliers. Okay, all these ones that I've mentioned, they are part of the intended users. In fact, in your CSME class, when you're in skills, all those stakeholders that you have there, they are likened to your intended users. Anybody that is going to benefit or going to utilize the information provided by the practitioner is an intended user. So that is the CREST. Criteria, report, evidence, subject matter, and three-party relationship. I hope that is clear. Any question? Any question? Any comments? Any observation? And we continue and we proceed. Okay, so let's go on. So, in the absence of any question, we proceed to the next area, which is what level of assurance. So, we talked about assurance meaning confidence. So, what we mean by that is that there are different degrees of what confidence, especially in auditing. There are two main levels of assurance engagement. Two main levels. Okay, what are the two main levels? You have the um, reasonable level of assurance and you have the limited level of what? Assurance. All right? You have the two, reasonable level of assurance and the what? Limited level of assurance or limited assurance. So, what are those things that is going to impact the degree of assurance? Okay, what are those that are going to impact the degree of assurance? These are the things that number one, the work, the amount of work performed in carrying out the assurance process, the amount of work performed in carrying out the assurance process. What that means is that, for instance, if we are doing a review is different from an audit. I hope you know. A review is you looking at it from the surface. You are not going deep. You are just checking some areas. You are not digging deep. When you talk about an audit, we are going to turn everything upside down, inside out. Okay, you are going to turn everything inside out to unravel everything everything that is contained in there. All right, that is what we mean by the amount of work. So that is going to also impact on the level of assurance. Number two, the determining factor of level of assurance is the result of that work. What do you get at the end of it? At the end of the engagement? Did you present a review? Was your engagement about a review or was your engagement about an audit? You are going to, so the result you get, the report you get, the feedback you get, is what is going to impact on the level of assurance. All right. So, like I said, these two form the elements or the factors that's going to impact or determine the level of assurance. So we have basically two types of assurance levels. And the two are the first one is reasonable assurance. The second one is what limited assurance. The fourth one is what reasonable assurance. Let's talk about that. Now, when we talk about reasonable assurance, what we mean is that is a level of assurance provided by the practitioner's conclusion expressed in a positive form. Okay, expressed in what? In a positive form. So let me explain what this means. When you say a practitioner uh, gives a reasonable level of assurance, what that implies is that to the best of his ability and knowledge, he got everything that he requested from the responsible party. He was being presented with everything that he demanded from the responsible party. They gave everything to him. So in that instance, he does not have any doubt, does not have what? Any doubt that whatever information that has been provided is not correct because all what is needed were given. And remember, when you are doing audit, external audit, for those of us that are external auditors, most times is what you ask that they will give. They don't give you everything. It's what you ask that they give you. If you ask for A, they'll give you A. And sometimes you ask for A, they know what you wanted, but they give you B. They'll tell you their age. I think not this, they are the same rounded shape fruits now. It's the same. You understand? So when you have a situation like that, then that means that they are not being truthful to the person. But when you ask for orange and they gave you orange, you ask for schedules for sales, they gave it to you. Schedules for purchase, they gave it to you. You ask for receivables, they gave it to you. You ask for payables, they gave it to you. You ask for everything you ask them, they gave it to you. All correspondence, they give everything to you. So in that instance, your audit report and your opinion is going to be presented in a positive form because to any length you can defend the work that you have done because they cooperated with you during the course of what they're giving. All what you needed were provided. Okay? Now, that's why you call it reasonable assurance. The second one, limited assurance. Now, in the case of limited assurance, a moderate level of assurance provided by the practitioner's conclusion expressed in a negative form. Okay, what does that mean? So what this means is that the reasonable level of assurance is a higher degree of confidence or present a higher degree of what confidence. I take it again. The reasonable level of assurance presents a higher degree of confidence, while the limited level of assurance presents a lower degree of what confidence. So what that implies is this: in limited assurance, what that means is you requested for A, they gave you B. You requested for apple, they gave you orange. Okay, they gave you something related to what you asked for. They did not give you exactly what you wanted. So when they give you something that is closely related to what you asked for, it means that they are not what? They are not being truthful. Or it means that they are not, they don't want to present, they don't want to show you everything. They are restricting the amount of information that should be available, that will be made available to you. Hence the word limited. Okay, hence the word limited. They did not give you everything that you requested. Rather, they gave you something that is what? Closely related to what you asked for. We call it what? Limited assurance. So because it's limited assurance, or limited level of assurance, what that implies is that you can only, your level of confidence can only be placed on the amount of information that is provided in that instance. I take it again. Your degree of confidence can only be placed on the what? The amount of information that is presented or provided to you during the engagement. So what that implies is you only say that based on the information presented, you are making your opinion. Based on the information presented, you are making your opinion. So when you see, if you look at this statement, they say that express in negative form. Now, that negative form you see there does not connote that something is bad. I take it again. Negative form, they say, practitioner's conclusion express, look at it here. Practitioner conclusion expressed in negative form does not connote that it is bad. What that means is that the information is the opinion reached by the practitioner is limited to the amount of information that is presented. So let me give an instance. So a practitioner was engaged to go and carry out um, an evaluation of a company unknown to him, right? That there was a fraud, that fraud had happened in the organization prior to his engagement. Unknown to him, he was not aware. They didn't tell him. So when he came on board, they knew what they were doing. They know that if he suspects or detect fraud, he's going to report it. So every form, every trace of fraud has been what has been removed by the management. So when the practitioner is done, he now said that uh, everything is okay. There is no false alarm. And the management and the shareholder or the management, they are now saying that, but fraud recently occurred in this organization. How come we were not able to detect it? Mind you, the practitioner is not a wizard. He does not have a crystal ball that is able to see everything. Yes, he should have carried out his work in a diligent manner. Okay? He should able to exercise due care, skill, and diligence in the course of his engagement. Yes. But that is still subject to him being able to work to detect fraud. Because the primary responsibility for the prevention and detection of fraud rests with the management, not with the external auditor. The primary responsibility of prevention and detection of fraud rests with what? Management and not the auditor. The auditor has a secondary responsibility towards fraud prevention and detection. So he's going to say that based on the information presented to me, I will not detect any fraud. So that means based on the information. So in that instance, his report is what? Is limited to the information provided, hence the term negative form. That means that he cannot say with all his full chest that what he has done or what they have presented to him is intact because he has some doubt, but he's going to limit his opinion on the information that is presented to him or her. That's the difference between the two. I hope you understand that. Okay. So for instance, that's why I gave those instances. If you go ahead with what we have here, say based on our review, nothing has come to our attention that causes us to believe that accompanying financial statements do not give a true and fair view. That is what it means. Okay. I'm just trying to buttress what I've said. Okay. Are we together? Is there any question, comment, observation before we continue? Any comment, observation before we continue? Okay, I think we are good. Someone should just respond, please, so that, okay, I think somebody is saying something. No question.
Yeah,
Thank you
okay,
so
sir. No question.
much. Those that we are following. That is good. Thank you. Who is the person? Let me see. Let me recognize the person. That is Olajumoke Pelumi. Thank you for your response. I love that. Thank you. Let's continue. So let's go to the next phase. We are looking at the meaning of audit. Or what we just did earlier, we are trying to look at assurance engagement. And I said that audit is a type of assurance engagement. Audit is a subset of assurance engagement. Yeah, I hope you understand that. Okay, let's continue. Let's look at audit. So audit, what audit means is an independent examination. Okay, audit means what? An independent examination of financial statement of an enterprise. Okay, an independent examination of financial statement of an enterprise with the intention of what? Expressing an opinion. The intention of what? Expressing an opinion whether the financial statement has been prepared in line with applicable financial regulatory framework. I take it again. Audit is what? An independent examination and expression of an opinion on the financial statement of a business enterprise. Okay? With the what? With the intention to ensuring that financial statements are presented in line with applicable financial regulatory framework. Okay? So what that means is that audit is just an aspect of what? Assurance engagement. Okay? It's just an aspect of what? Assurance engagement. So if you are defining an audit, you talk about an auditor. So an auditor is appointed, okay, during the audit engagement to express an opinion on whether the financial statement of an entity are prepared in all material respects in accordance with applicable financial reporting framework. Unlike in assurance engagement, we're talking about what the practitioner. In an audit, you talk about the auditor. I hope you understand. So audit or auditor essentially focuses on what? Statements. He reviews, he examines, he evaluates financial statements. Basically, that's what it does. But a practitioner does more than looking at financial statements. I've explained that. I don't want us to overflow it, okay? I hope you understand. Okay, that is the difference between assurance engagement and audit. I hope you understand. It's clear. Good. Now let's continue. Let's go on to the next one. So we have looked at audit. Let's look at the next one. Audit related services. What do you mean by audit related services? As the name implies, audit related is likened to an audit, but it is not an audit. It is likely to what? An audit, but it is not an audit. We call it audit-related services. Excuse me. These are engagements undertaken by an accountant or a firm of accountants to perform such assignments. These are engagements undertaken by an accountant or a firm of accountants to perform such engagements, such as what? Review of data, agreed upon procedures, or compilation. Okay, so when you talk about review of data, what does it mean? Now, a review of data provides a what? A low or a moderate level of assurance. Okay, so what does that mean? Let me explain what you mean by review. When they say you should carry out a review, it means that somebody has already done something. Let's say they should say review the financial statement, for instance. Now, that means that the responsible party has already prepared financial statement. Okay, so what the accountant is just coming to do is to ensure that has it been prepared or not. He's not going to check so many things. He's just going to look, okay, he has an evidence to show that this thing has been prepared. In fact, he might not even need to prepare any report. He'll just say he saw that they have prepared financial statement. That's what he means by a review. It's not doing something, it's not doing much. Okay? It's not doing much. Now we call it what? A review. So in that instance, what you will be doing Three is that you will only be talking about what has been done. So in a review, those elements that you have in assurance engagement, you don't have them complete. Okay, you don't have the five elements complete. You may have a few of them. Sometimes you may have three, you may have two, sometimes you may have up to four. For instance, in a review of financial statements now, we will have criteria. Okay, you're going to have a criteria. Because you're going to check the financial statements are prepared in line with acceptable or applicable criteria framework. That is IFRS, right? Number two element you are going to see in review of financial statement, you are going to see what we call evidence. The accountant will do what? We gather evidence. Okay. Number three, you are going to see subject matter. Subject matter are those information, the information presented by the management. Right. Number four, sometimes you might need to write a report. Okay, he's going to write a report, and it's not will just be that he has seen that it has been prepared. He's not going to express an opinion to say that something is yes or something that is fundamental to do any company. Just going to say, I saw that they've prepared the financial statements. That's all. The fifth one, you're not going to have a three-party relationship. You're going to have a two-party because you're going to have only the accountants and the accountant and what the responsible party. Because most time we're talking about review, review does not include the intended users. You understand? Review does not what include the what intended users. So it's only between the accountant and the responsible party, the accountant and the management. That's all. You can see that you don't have a three-party relationship, and that nullifies it as being qualified as an assurance engagement. Rather, it is a review. All right? Then we have another one. Agreed upon procedures. As the name implies, agreed upon procedures. What that means is that is a type of engagement where the party, that is the client and the accountant, specify the procedure that should be followed by the accountant in performing the engagement. As the name implies, the name speaks for itself, agreed upon procedures. That means you have two people that are involved, the client and the accountant that will do the work, that will perform the work. And they're going to talk about the procedure they're going to use to perform or to carry out the engagement. An example of an agreed upon procedure could be that, oh, the management can say that our inventory, we want you to review our inventory. We want to be sure that the value that we have put in our financial statement as inventory balances is correct, is valid. So help us to carry out a review. I mean, carry out a review. So the counter will do what? We put all these resources together and carry out a review of the inventory. Okay, and it's going to at the end of the day, it's going to present what a report. So that report will show whether the balance they have in the financial statement is correct as per inventory or not. Okay, because one thing you need to know is when we talk about agreed upon procedure, it's between two people. So the report does not involve the intended users, like I said, it's mainly private. Okay, the report is not what is not made public. Hope you are getting it. So we have the compilation report. What do you mean by compilation report? Now, compilation report is another type of audit-related services. It's another type of what? Audit-related services. What does it mean? So, in the case of a compilation report, before now, we talk about audit and review. We are talking about um, the accountant coming to review what has been done, right? But in the case of a compilation, the accountant will be the one that's going to gather the information. The one that is going to prepare that information, that document, that report on behalf of the what? On behalf of the client. That we call it compilation report. Okay, so the accountant is engaged to prepare information for the client rather than audit or check the information prepared by someone else. Okay, so for instance, your client asks you to help them to complete their task computation. You know that task computation will only take place after you have completed your financial or year-end audit. You now talk about task computation. So at that point, the firm of accountants or the accountant will now come in to prepare the task computation, okay, for the client. That is an example of a compilation report. I hope you get it. I hope you are getting it. Okay. Any question before we proceed? Any question? Any comments? Okay, if there's any comment, let's go to the next one, which is the what's it called? The non-audit assurance engagement. What does it mean? The non-audit assurance engagement. What does it mean? Now, when you talk about the non-audit assurance engagement, let me explain it to us. What it means. Now, a non-audit assurance engagement refers to services provided by professional accountants or auditors. It refers to what? Services provided by professional accountants or auditors that involve evaluating or concluding on aspects of an entity's financial,
I want on this
non-financial
one where madam no green come.
condition.
That guy,
So let
can
me
I
explain
can
what
I
it
meet
means.
that guy?
As the word implies, non-audit assurance engagement. So sometimes the firm of accountants, that is the audit firm, will be engaged to come and carry out either a financial audit, okay, or they carry out a non-financial audit. Now, the non-financial audit, what that means is that they are not going to focus on the financial aspect of the business. Rather, they're going to focus on the non-financial aspect of the business. Okay, because you understand that for most organizations, they understand that the non-financial most times translate to financial. If the non-financial is not properly managed, it can translate to what? To financials. I hope you understand. That is what we mean by non-assurance audit engagement. The other thing you also need to note here is that when you talk about non-assurance, non-audit assurance engagement, right? You also need to note that it provides comfort or assurance on specific aspects of the entity's operations. It provides what? Comfort or assurance on specific aspects of an entity's operation. For instance, example of these are what you have here. The corporate social responsibility is a non-financial uh, audit. Okay, we want to see how socially responsible has the client been in terms of protecting the environment, in terms of employing, improving the well-being of his host community, in terms of providing scholarship to students, indigent students, in terms of providing basic amenities to the host communities, all of these, all of these are part of what forms the corporate social responsibility. All right? All of these are what form the corporate social responsibility. The other one that can also form non-audit assurance engagement is when you talk about the anti-money laundering review. Anti-money laundering review. So a Nigerian bank can engage an auditor to review its anti-money laundering controls and procedures to provide an assurance on their effectiveness. We're going to talk about, we're going to look at money laundering in subsequent chapters, okay? In that chapter 2. What we mean is that we want to be sure that all the anti-money laundering procedures and controls put in place, are they still effective? All right. So for instance, any money that is above, deposited by an individual that is above 5 million naira ought to have been captured, okay, and reported to the Financial Crimes Commission, that is EFCC, Economic and Financial Crimes Commission, okay, so that they are aware that, oh, somebody deposited above 5 million. And for an organization that when they deposit 10 million, they're talking about cash deposits now. You know, online you can do way more than that. At cash deposit of 10 million naira, you also need to notify the Economic Financial Crimes Commission and all those law enforcement agencies where necessary. Okay, so that is what that's another example that we have. Okay, then we also have still part of the what's it called, non-audit assurance engagement is when you talk about the IT audit also. It still forms part of it. Okay, it still forms part of it. So IT audit, sometimes there might be a need for them to look at, to evaluate the IT controls or IT framework that exists in an organization to be sure that those controls are intact or they are effective. Okay. We also look at some other ones. You look at another area is looking at employment policies. Policies differ from organization to organization. Okay, some organizations, what they term as their policy might be different from what is available in another organization. Sometimes you might need to look at each individually, be able to see the peculiarity as it affects or as it impacts that particular organization. Okay, so that is that. Okay, so we have been able to look at. So let's look at some other aspects of assurance, types of assurance services. We have assurance service that we didn't mention. Okay? I told you that we are going to come back to it. We have looked at audit-related services. We have looked at non-audit assurance services. Okay? Let's look at the assurance engagement, types of assurance engagement. We are still going to further look at that in subsequent chapter. That should be chapter um, 11 and 12. Okay? We are still going to further review the audit-related services and assurance services. But for now, let me just take take a little time to explain other types of assurance services that we have. Okay, I already mentioned audit of financial statement. We have others. One of it is report on risk assessment. Now, report on risk assessment is an assurance engagement. It's looking at how the organization is exposed to risk. Because every organization, one way or the other, is facing business risk. And what are risks? Risks are anything that can prevent an organization from achieving their set objective. Those are risks. Okay. Now, if you are looking at that kind of an engagement, what do you think will be the criteria for measuring whether the organization is exposed to risk or not? The unique criteria or the criteria that we can use is to look at criteria that are risk management related. And a popular one is the ISO 31000. ISO 31000. So ISO 31000 basically talks about risk management. It defines risk. It talks about how to identify risk. It talks about how to assess risk. Okay. It talks about how to report risk. And lastly, it talks about how to mitigate against risk. Okay. So what that implies is that for you to say you have carried out an evaluation of whether the organization is exposed to risk or not, your criteria for ensuring that will be your what? ISO 31000. Talks about what? Risk management. I hope that is clear. I talk about what? Risk management. All right. Then the next one we need to talk about is another example of assurance services is when you talk about what? best in price or value for money audit. Best in price or value for money audit. What do we mean by best in price or value for money audit? So this is another type of an engagement, sometimes that is carried out. Before now, best in price of uh, value for money audit is usually done at the public by the public sector organizations. Okay, but over time, the private sector have also embraced best in price and value for money audits as part of their what cost cutting measures to know that they are not spending lavishly. Okay, or how do we explain an instance? You say you want to buy CUG phone for your staff, for management staff, and you're recommending that they should buy iPhone 14 or 15 Pro Max as CUG phone. That means you're not being conservative. Okay, that means you are just spending money anyhow. So when you carry out a value for money audit or best in price and value for money audit, what you are doing in essence is that you want to be sure that money is being judiciously utilized, that there is no wastage, there is no excessive spending, there are no spending that are not within the budget. All of these are what you'll be doing when you carry out value for money audit. Because essentially, you're going to focus on three aspects, which is the economy, effectiveness, and efficiency. Okay, so that's what we are going to focus on. Another area we need to also look at is the aspect on report on data reliability. Report on what? Data reliability. It's another type of assurance engagement. Now, data reliability will come in when there is a merger between two banks or two organizations. Okay, when there's a merger between two organizations, or when there's an acquisition between two organizations or more organizations, you're going to talk about data integrity. What it means is that you want to be sure that that data that you exported from another company, that you are now putting on another that you are taking over, you are migrating, that you have correctly exported that information and you are migrating it correctly to another platform. Like what happened in 2017, 2018 when Access Bank and Diamond Bank came together. Remember that Diamond Bank at that time, they have this Diamond for Cash extra promo that they normally do every year, right? Where they give some people, some of their customers, salary for life, or sometimes they give them some cash rewards and all those stuff. You know that even when Access Bank took over Diamond Bank, that promo is still on. They still do it. Okay? They still run that promo. So what that means is that at the time of migrating Access Bank to join, migrating Diamond Bank to join Access Bank, the depositors' balances that they migrated, there is a need for them to check that you are not increasing the depositors' balances as a result of what? The migration. For somebody that has 10,000 naira for the migration now, when you now migrated to Access Bank, Access Diamond, the person is now having 100,000 naira, the person is having 1,000 naira. That should not happen. So that engagement that is done to ensure that data or information has been correctly migrated, that they have followed all the due change management processes. That is what we call a report on what? Data security. Hope you are getting it. Excuse me. Then there are also instances where you look at reports on what? Internal control. There's what we call ICOFR, ICOFR, Internal Control over Financial Reporting, ICOFR. So there's a need for you to review your internal control because when you have a weak internal control, it's going to impact on the, what's it called? Impact on your what? On your financial statement or financial reporting. So there may be for you to review your internal control, whether the internal control is strong or it is weak. So based on that, you'll be able to close those gaps so that your financial reporting reward will be solidified and be effective. All right. So those are some of the examples of assurance engagement. So I've looked at the examples of audit-related services. You look at the examples of non-audit assurance services. You also finish looking at assurance services now. Does anybody have any question before we proceed? Any question? Any comment? Any observation? Okay. If there are no observation, comment, let's take a look at some questions because I know that most of us that we are here, our focus is on how do we ensure, how do we answer questions in examination? That is the main focus for most of us that are here. I want to believe that, okay? Because I know that most of us, we have read this book, I mean, this, what do you call it? I can study text, cover to cover, okay? We have read it cover to cover, and you are very sure of everything that you have there. So let's take a look at some of those questions. Okay. Okay. So for me, just a minute. We'll look at the question now that relates to. I'll share I'm going to share the question with us now. Just a minute. Somebody is asking a question there. For me. Let me see. Any question? Okay. Okay. It's not referring to me. Now let's look at it. Let me hold on. There's a question here I want us to look at. This material was shared by my other facilitator, second facilitator yesterday, and you have it. So please ensure you practice all the questions you have there. Now there's a question on this in this diet, May 2017, question number 4. May 2017, question number 4. Let's us look at it. Let's look at it. Okay? Let's look at it. Look at the question. In most cases, the role of a practicing accountant is the provision of statutory audit of the annual financial statement of a company. However, the practicing accountant may be contracted for assurance engagement other than a statutory audit. Required, explain assurance engagement. I hope you've seen that. Required, explain what? Assurance engagement. Okay. The second one, let's look at it. Alaji, the B part of that question. Alaji Chukudi is the chairman and majority shareholder of Talking Drums Limited. This is question number 4, May 2017. Alaji Chukudi is the chairman and majority shareholder of Talking Drums Limited, a telecommunications company operating in Nigeria. The company had experienced considerable growth in the past. However, over the last 3 years, there has been a noticeable increase in cost of operations, which is slowing down the growth of the company. Management had explained that the increasing cost is as a result of expansion of coverage area, which management believes will lead to further expansion and growth of the company in the nearest future. Alhaji Chukwudi wants to get a certain level of assurance that there is value in the increased expansion cost the company was incurring. As a result, the board of directors resolved to engage a practitioner for for a value for money audit. Okay? Of the coverage of the what? The expansion cost. I've talked about these two. Okay? So let's answer the first one. Assurance engagement. I've explained it to us before now. All right? You have the definition, you understand it. Okay? So we talk about assurance engagement. We said it's an engagement where you have what? Where you have the practitioners. Let's go back to the notes. All right? What is asking again? Okay, fine. And that's what you're addressing now. Thank you. So let's go back to, I'll stop share. I'll go back to that particular note so that you understand what we are saying. All right? Just a minute. Let's see the same topic. It's coming. Mm. So this is it. Hope you can see my screen. What is what? What is assurance engagement? So we say that an engagement, okay, sorry. We say that it's an engagement in which a practitioner expresses a conclusion designed to enhance the degree of confidence of intended users other than the responsible party about the outcome of the evaluation or measurement of a subject matter against criteria. You've seen it, right? That is what they expect you to write. All right, this is what they expect you to write. Now, what you need to note here is that when you're answering questions in exam, you have to be as explicit as possible. Now, if you cannot write it in this way as it is here, you can paraphrase it. Paraphrase here means you should be able to use some alternative words that carries the same meaning as what you have here. You understand? You might arrange it in when you're not you're not writing it in verbatim, but the information you are presented is conveying the same message. That's what I mean by paraphrasing. Write it in such a way that when the examiner sees your answer, you will not have any other option than to give it to you. Okay, you don't have any other option than to do what? Than to give it to you because you have been explicit enough. And what you need to note here is that when you're answering question in exam, you have to ensure that you write in such a way that will be pleasant to the reading of the examiner. The examiner has thousands of answer scripts to mark. So when you are not explicit, when you are not expressive, when you don't speak the language, when you don't understand the question, you just write anyhow. You have made it easier for the examiner to quickly just look at that answer and give whatever grades he wants to give to it. Okay? You also need to understand that even though they are going to be cross-checking of marks and every other thing that they do during the marking, but one thing is for sure, if at the first instance of reviewing your or trying to evaluate your answer booklet, you see that your answer does not contain some audit terminologies. You're just writing plain English. You can speak good English, but your answer does not incorporate these audit terminologies in your answer. I'm sorry, it might impact your overall performance or result at the end of the day. So whether you are paraphrasing or you are not paraphrasing, kindly ensure that you go in line with the uh, mindset of the examiner. How will you feel when you have, just put yourself in a situation, how will you feel when you have a child of yours that is able to represent you in a way that you will be happy? So that when they see, that is this person's child, you'll be happy, right? So in the same way, the examiner expects us to be. At the skills level, I must say, there's so many things that they will gloss over, where they will tell you that you are still learning. But once you get to the professional stage, they will not just say, let this person go. This person has sat for this exam for so many times. Let us release him. Let us release him. Let us release and let her just go. No. They want to be sure that as they are releasing you, you are confident. They are confident that you are going to be a good ambassador of the institute. Do you understand? So don't say, why did this happen? Why are they so? Why did they fail you? See what you are doing. Let me explain what you are doing to what you are as it is. Let me explain it to us so that you understand. You know doctors, right? Medical students, when they are in the university, when they are in medical colleges, you see that they don't just pass them. If you go to university where they run medical school, you see that the medical students there, they are very, very committed. They are very, very serious. They have little time for social life. You know why they do so? Because you'll be dealing with human life. If they put emotion to passing medical students to becoming medical doctors, that means that we are going to have a lot of what quacks in the system, in the medical field, and that will not be good for any country. So you see the stress they make them go through. That is what they are doing. So for I can also, yes, you are not dealing with human life, but you are dealing with human life indirectly. Let me explain. Imagine you prepare financial statements now, and when the cost of preparation, the company made profit, but you, because you were not well grounded, you read financial statements and you recorded what loss because there are some information in the trial balance you have not considered, and you presented that the company, you are the CFO, you now presented that the company is in what is in a loss position. Yes, you are not affecting the person's what do you call medically. But the person, the owner of the business, has invested so much in the organization. So he believes that by now he should be reaping the profit of his what? Of his commitment. You now say that no, sir, your company is still in the loss position. That can put that man or the owner of that business into what? Into medical challenge. The person can suffer stroke as a result of that. The person can even die because the information that you presented is fake, is not correct, is incorrect. So I need us to understand the perspective to which I can works. This level you are in, they will not just say, let my people go. No. If you are not, if you don't merit to be qualified, to become chartered, they will not allow you to go. And that is why at Equity Professional, we are trying our best to ensure that we equip you with all that you need to go to that examination hall and do what? Perform your best, do your best, and the result will speak for itself. But one of the challenges that we face with students is that students that don't prepare well, their level of confidence when they go to write examination is also very low. And one of the psychology of exam is that when you go to the examination with a low level of confidence, there's a possibility that the result might not turn out great as expected because you are going there, you're already demotivated. But when you go to the examination with an optimistic mind and say that, oh, this exam is I'm done and dusted this time around, you go there. That means you are going to put in all your fighting spirit. You are going to put everything in. But what you need to note here is that you cannot give what you don't have. It's very clear. What you don't have, you can't give it. So if you have not prepared well, there is no soothsayer that will tell you to go and pass that examination, go and fast, go and do this, and you're going to come out successful. Nobody will do that. Okay? So please, that's why you see us, we are taking time, we are diligent, we are committed to ensuring that your success is our what? Is our own pride. When you succeed, that is when we are happy. Okay? We are passionate about your success, and that is what we are doing there. Okay? I hope that is clear. So enough of that. Let's go to the second question. Hope you understand the first answer. Okay, let's go to the second question now. I'm coming. Now, this is the second question. Let's read it again. Now, let me explain to us how you read the technique for you to be able to read this kind of case study when you see it in your exam. Let me share something with us. When you have a case study like this, you have a question where they ask storylines like this. What you need to do first is to read it very fast. You read this very fast. Why are you reading very fast? You quickly want to have an understanding of what this storyline is about. That's the first reading. When you read it very fast, ignore the question. Do not look at the requirements. You know why? If you look at the requirements, when you are reading again, you'll be looking out for those answers. And sometimes some of those answers, they are implied. They are not on in the storyline. So your mind will be what? Will be closed. You'll be looking at it with a myopic mindset. So what I always advise my students like that is a proven strategy for you to pass exams that is qualitative like this. Qualitative like this that is theoretical. Is for you to look at the storyline, the case study, read it first, very fast, have an understanding of what it means. Second time, read it with the intention of further understanding of it. Right? After the second reading, you now go to the requirements, read it. Then now go back to by the third time. All what I'm telling you, this reading should not be more than 5 minutes. I'm telling you, all this you're reading should not be more than 5 minutes. You're reading for the third time. When you read for the third time, you are reading it with the intention of being able to extract all the points that will fit into the requirement. And where the answers are implied, you're able to what? To extract that information, and that is it. So this is a strategy that has been proven, tested, and it has worked. And I believe it's going to work for us also this diet. So please, let's use this. You know, the essence of you having been in this class is you are going to learn new ways, new strategies for passing advanced audit and assurance. That is just the truth. Because if you keep doing the same thing over time, every time, you're not going to expect any different results. But when you do things differently, and I can assure you, you are going to experience a different result, which should be what? Which should be fantastic. So let's look at each one before we wrap it up. Okay? I just want us to have an understanding of how we go about this. Now, this is the one I was talking about. Let's read it together again. We don't need to read it. Let's read it together again very fast. So you say Alhaji Chikudi is the chairman and majority shareholder of Talking Drums Limited, the telecommunications company operating in Nigeria. The company had experienced considerable growth in the past. However, over the last 3 years, there has been a noticeable increase in cost of operation, which is slowing down the growth of the company. Management has explained that the increasing cost is as a result of the expansion of coverage area, which management believes will lead to further expansion and growth in the company in the nearest future. Ajikudi wants to get a certain level of assurance that there is value for the increased expansion cost the company was incurring. As a result, the board of directors, the board of directors resolved to engage a practitioner. Call me, sorry. Engage what? A practitioner for a value for money evaluation of the coverage expansion cost. Required. Explain value for money, 2 marks. B, explain the 3 E's of achieving value for money audit. You've seen it, right? So that is that. So let's look at it. What do you mean by value for money audit? I've explained it to us. It's a type of engagement where where the practitioner is engaged, particularly to ensure that there is what? Control over cost, to be sure that they don't spend money just anyhow. All right? That is what we mean by value for money audit. Then you look at the next one. Explain the three E's of achieving value for money audit. What are the three E's? Economy, efficiency, and effectiveness. I'm going to explain them one after the other. Please note, when you see where they put 2 marks, 6 marks, don't say what they mean is just for you to write in one line. No. You know, in quantitative, for instance, in CR, corporate reporting, is what you post. They don't normally look at your final posting. They look at all the ticks. They ticks all your postings, okay? All the credit posting, debit posting, they look at everything. So if your final answer is also correct, you also be awarded marks, right? So that means you cannot afford to lose any marks, provided you're able to post something. But in the case of a qualitative, like this one we are talking about now, you see 2 marks and say, what do you mean? Just write one line. That will fetch me your 2 marks. I'm sorry. Sometimes that your one line can only fetch you half mark or no mark at all. You know why? Because if you are not intentional when you are answering these questions, if you not exercise due care, skill, and diligence when you are answering this question, you are going to answer it in that way, and you feel that the examiner will be magnanimous to award you mark generously because it's just 2 marks. Now that you see that sometimes when the result comes, like some students say, I had 48, I had 49, I had 40 something. You'll be surprised. Why? How come? How manage? These are the reasons. Because sometimes when you are giving your answers, you don't incorporate those audit terminologies in your answer. That is one of the reasons. Okay. So let's look at it. So you have seen it, right? Let's go to question number the answer. I've explained it to us. Let's go to the answer. Question four. All right. Let's go there. You have this in your. She sent it to us yesterday. So you have all the questions there from 2014 to 2023. If I'm not wrong, you have it there. So try as much as possible to practice those questions. Okay, we are going to that area now. Question number 4. Just hold on. Just hold on. We're going to question number 4. That's where we stopped. This is it. Can you see it? So according to ISA 100, assignment is one where a participating accountant evaluates or measures the subject matter. Yeah, somebody is asking a question before we proceed. Yeah. And I will share the question. Okay, don't worry, I will share the question. Don't worry, I will. After the class ends, I will share the question. Don't worry. I will share it. That shouldn't be an issue. Okay. So you have it. What's it called? The solution. Look at it. According to that's the A part of it. ISA 100. It's not compulsory you put according to, if you don't know the auditing standard, don't do Sabinus. Don't be like Sabinus. Okay? It's not compulsory. But if you are sure, you know it. Because you go and quote the wrong auditing standard, whatever you have written will be seen as what? Wrong. As I always advise my students. Enough of this paparazzi trying to overly impress your examiner. What you need is the content and the context of your information. If the content and the context of your information is weighty, you will give you your mark. You understand? So all this other one, all this according to ISO 100, those ones are just how do I call it? They are just icing on the cake. So when they're supposed to give you like 2, because you have been able to put all these things there, it might attract additional marks to you. You understand? That is just it. You understand what I'm saying? So you see now, financial engagement is one where a practicing accountant evaluates or measures a subject matter that is the responsibility of another party against suitable criteria and express an opinion which provides an intended user with a level of assurance about the subject matter. You can see what we explained, they paraphrase. This is what we mean by a paraphrase. They paraphrase it. Something like this is a paraphrase, okay? The way they have put it, you can see that everything that we talked about is there. You talk about a passing accountant as against what? A practitioner. But for you, if you can put a practitioner there, they will still give it to you. You understand what I'm saying? Now, so look at the value for money or the B part of that question. Look at the B part of that question. What did I say? Value for money only means what? Using resources in the best way in order to achieve what? Intended object. That means you shouldn't have any waste. No wastages. That's what it means. Okay? Then the three is I said what? Economy, efficiency, and what? Effective. What do you mean by economy? Look at what it means here. That is, it means spending money prudently and not paying more than necessary for resources such as material and labor. You understand? And again, when you answer some of these questions, please do not forget to incorporate your some of those highlights of that question in your answer. Don't just write as if you are lifting the answer from the textbook. You know what I'm saying? Sometimes you might need to give make references to the case study itself. Okay? You might need to do what? You might need to uh, make references to the what? To the case study itself. For instance, let's talk about this economy now. You have explained it, right? It means spending money prudently and not paying more than necessary for resources such as material and labor. So here, such as material and labor, you can see here that, for instance, you have people that they are doing expansion. You have workers. There is no enough materials, yet you have employed more than enough labor where you are paying what? Extra amount of overtime or extra amount of this. They are spending, there is no material, yet they are being paid for not doing anything. As in this case of Shukudi and so talking drum. Do you understand what I'm saying? You give so that person will know that yes, this person understand the case study. Or for another instance, it's material. Say that, for instance, now they went to buy materials uh, from a very they bought materials from not from a competitive pricing position. Or they just decided to buy material. They don't even do comparison. They did not compare prices. They did not do price survey. They just went and bought. They just saw it and just pay. Whether the price is high or not, they don't know. And this is another. This they could increase the cost for the organization. Understand? We put all those things there. So they will know that you know what you are saying. The second one is efficiency. Efficiency is what? Means using resources in such a way that they produce the greatest possible amount of output. That means getting more from the use of available resources. That's what I mean by what? There should be no what? There should be no wastage. Okay? So for instance, you can put an instance there. They bought cement, okay, or they bought raw material. You don't want to put cement. They bought raw materials. They must be sure that the material, the required number of quantity of blocks they're supposed to get from those materials is what they get. For instance, let's say in a bag of cement, now you want to mix cement and sand, you get like, let's say 40 or 50 blocks, okay? But because they have not mixed they've not done the mixture correctly, they got 30 or less. So in that way, it means that they are not being efficient. Do you understand what I'm saying? So you give all those instances there. Then the last one, effectiveness. Now, for effectiveness, you're talking about what means using resources in such a way as to achieve the desired result. Efficiency is of little value unless the output of the system is what the entity wishes what to achieve. Okay? Efficiency is of what? Of little value unless the output from the system is what the entity wishes to what? To achieve. So what that means is that you give an instance also to be sure that what the normal time, for instance, you want to expand, you're on a project, expansion project. You have what we call timelines or milestones. that by so and so time you should have achieved this, by so and so time you should have achieved this. Anything that's going to derail the milestones achievement is an additional cost to the organization. It's an additional cost to Chukwudi Nigeria Limited. That's what I'm saying. So those are the things you are going to put. Ensure you're able to incorporate that case study. Don't just leave the question, don't just leave the answer straight from the textbook. Let them have an understanding that you have understood the case study and you're able to improvise by doing what? By putting those inputs as part of your what? Your answer. That is the only thing you need for you to pass on it. There's nothing mythical about it, there's nothing magical. That is the way to go about writing and passing your advanced audit in assurance. As simple as that. You know what I'm saying? So please endeavor to try some of these things, okay? Endeavor to try some of these things on your own. All right. So that is that. So I'll still look at another question because you have some time. If you have any question, please feel free to ask your question now before we proceed. Thank you. I'm looking at still trying to look at another question we can also look at. I'm here if you have any question. Any question? I'm here with you. I'm here with you. If you have any question, to let me know. Trying to look for another question we can quickly look at now. The last one we did is question number 4, May 2017. I said it again. I'm going to be share at the end of the class. Don't worry, I will share. I will share. I'm coming. I'm trying to see where those questions might be. Mhm. There are so many questions on assurance engagement here. Yes, I can tell you for free. There are so many questions on assurance engagement here. So you just need to open your eyes and take your time to looking at those things, okay? And that is all you need. Okay, so I'm coming. I want to look at another question before we go. I'll just state that. We'll go there, we'll go from there. All right. So let's look at this other question. This is I'm coming, I'm going to share it now. Hold on. I'm going to share my screen. I hope you are getting what I'm saying. I hope we are together. Okay, look at this one now. This is another question. The one we look at is May 2017, right? This one is May 2018. Okay, May 2018,
Sorry,
question
sir, I
number
have a
2.
question.
Please go ahead.
With respect to the reasonable and negative assurance, if in an exam condition we are given a scenario whereby the practitioner um, asks for information, quite all right, but then probably the company has cleared off any trace of the fraud issue they had. So are we going to classify it under reasonable or are we going to classify it under negative assurance?
Can you
Like
could you replace your question,
there's
please?
a there's a fraud
Rephrase
issue.
rephrase your question. Let me understand it.
Okay, you told us in the reasonable assurance that the practitioner was given everything he asked for,
Yes,
but in
correct.
limited assurance, and sorry, negative assurance, he wasn't given everything he asked for, probably a
No, no, no,
similar
no, no. You are mixing it
percentage.
up. Hold on. You are mixing it up. That's why I said you should rephrase the question. You were right before, but you now change it. I said there are 2 levels of assurance: reasonable and what? Limited. Not negative, limited. you understand what I'm saying?
Yeah.
So take it off from there. Limited level of assurance. Where I say he has limited information. So continue from there.
Okay. So in the limited, he has limited information, but he's
Yes.
in this company where there's a fraud issue, and he was
Yes.
given everything he asked for. But then the company has cleared every trace of the fraud issue. So in everything he asked for, the fraud issue
Mm.
was not seen there. So,
Mm.
but it was later found out. Will you classify it as
Who found it out? Who found that?
limited?
Who found it out? Who found it out?
Probably the shareholders.
The shareholders. Okay.
Yes. Maybe probably they knew about it or had a hint. So they're
Mm-hmm.
now faulting the practitioner for not finding it out. So are
Mm-hmm.
we going to say that it's a negative, it's a limited assurance? Are we going to say
Yes.
it's
Yes.
reasonable?
You know, I said something when I was explaining this limited assurance. I said must be given all information. When they have cleared any trace of fraud and they not inform him, they're not even giving the hints that sorry, there was fraud sometime in this organization. No information, no hints like that was given to the auditor. In that instance, whether they give everything to him, but they let that particular that particular information out. So far, he was not giving that information relating to fraud. Any trace of it has been what? Has been wiped off. He's still working with what? Negative. He's still working with what? Limited assurance. So his report will be in form of what? Negative. Do you understand?
All right. Thank you, sir. Yes, sir.
He will still give a what? A negative form of what report because you say that based on what has been given. But let's say they have given it to him and he was not able to detect that there was fraud. They gave him everything, even the one that relates to fraud, but he was not able to detect that there was fraud. In that instance, he can be what? Held liable. Why? Because he's supposed to have exercised due care, skill, and diligence in the course of performing his assurance engagement. Even though he has a secondary responsibility, but in the course of performing his assurance engagement, he ought to have known that he should exercise due care, skill. That means he must understand how to detect fraud. If he doesn't know how to detect fraud, even when they give him information that relates to fraud, he will still not know. So that would be a negligence issue. Do you understand? I hope I'm able to answer your question.
Yes, sir.
All right. Any other question before we proceed? Any other question? Are we good? Okay, let's look at this one. This one, we're not able to solve it, but it's your own. You should try and solve it. Okay, we'll read it. Let's see how far we can go before the time runs out. Now, this question number 2, 2019, May 2019. Okay. Bolo, Boloku Palemo Pharmaceuticals Limited is a fast-growing company. Boloku Palemo Pharmaceuticals Limited is a fast-growing company operating with its head office in Onitsha. The management of the company is targeting the takeover of another company located in the south-south zone of Nigeria, with the intention of expanding its business frontier. Preliminary discussions revealed that the management of the other company has not shown any effective resistance to the proposed takeover. However, the management of Buluku Palemo wants a clear due diligence work to be performed to determine the viability of the acquisition. As the auditor of the acquiring company, that is that company in Onitsha, right? No, that's the company in the south, let me see. Mm. Yes, company in the south. Okay, as auditor of the acquiring company.
No, Akari
No,
company is
yes,
Boluku
is the
Palemo.
exactly Boloku Palemo. Thank you. The acquiring company is the
Yeah.
Boloku Palemo. Yeah, thank you. The management has approached you to carry out a due diligence work on the company that it has proposed to acquire. That is the company in the south. The element also requires your firm to carry out the engagement in accordance with the provisions of international standard on review engagement. Now, they have not gotten to this area. Well, what I just want us to look at here is what we look at when we talk about what? Due diligence. What I want us to look at is the concept of what? Due diligence. Due diligence is who can explain to me, what do you understand by due diligence? Is it an assurance engagement or an audit related service? Who wants to try? I just need somebody to just tell me, is it an assurance engagement or an audit related service?
I think it's both.
It's both. No, it's
I
not
don't know.
both. It's not both. See, the answer is even in the question. Look at it here. Look at it. International review of what? International standard of what? Review engagement. You have seen it. So it's a type of audit-related service. Due diligence engagement is a type of audit-related service. You know, I told us that we are still going to look at it in chapter 11 and chapter 12 respectively. You know, I told you we have not gotten there, but I just need us to look at this one. That's why we are not going to delve fully on it. I just want to use it to explain something to us. Okay, so don't get worked or don't get agitated. I just want us to get two things from this particular question. At the end of the day, the time we are done with everything, the chapter 11 and 12, we can go back to this question and treat it. You see that we'll be able to treat it easily. It's not difficult. Okay. Now look at this. The one I want us to look at is what? Explain the concept of due diligence engagement. What does it mean? Now, when we talk about due diligence, is a form of what? Engagement. Is a form of engagement. Like I said, it is an audit-related service engagement where the purpose of it, due diligence, is basically when there is what? When there is an acquisition, or when there is a merger, or when there is a bought over or buy over. Acquisition, merger, or when there's a what? A buy over. And then you talk about due diligence. Okay? Now, the essence of this due diligence is to be sure that that business that you are trying to buy over, you are trying to acquire, you are trying to merge with, is viable, is going to increase your profitability as a company. So that is the essence of due diligence. So when you're talking about due diligence, it goes beyond financial. Okay? Due diligence goes beyond what? Financial. You are going to look at non-financial, because like I explained, non-financial in most instances, if not properly managed or supervised, it impacts the financial. I take it again. Most times when you have, what do you call it? You don't manage your non-financial very well, it's going to impact negatively on your financial. Let me give just one instance. Now, you have a workforce where you have what? High iteration rate. That is, there's high labor turnover in your organization, especially in the accounts department and in the production department. You employ somebody today, by tomorrow the person has resigned, the person left, they abandoned, they left. Over time, it's going to affect the quality of your product, one, in the production aspect. Number two, it's going to affect your financial reporting because there is no consistency. You know, there's an accounting principle that talks about what? Consistency. Because somebody that has left, any person joined, there was no proper handover. He picks up from somewhere. Before you know it, you'll be reporting on wrong information. Because of what? That labor turnover. Labor turnover is a non-financial implication. It has a non-financial implication. But if it's not properly managed, it's going to impact the financial. You understand what I'm saying? That's what I want us to look at. So let's look at that, the A part of that question. Sorry, the class will soon be over now. It's just 2 hours. Just hold on. I hope you are getting it. I don't want us to waste time on it. So let's go. Just hold on. Look at it. One of the most common forms of direct reporting engagement is what? Due diligence. The time refers to an engagement where the practitioner is engaged to make inquiries into the account of the organization and or activities of the entity. You can see activities of what? The entity. That is what it means. Due diligence work is mostly commonly used in the context of what? Merger and takeover. You can see the work involves obtaining information about the targeted or target company prior to the takeover or merger. The objective should be to find out everything that may be relevant about the target company operation, financial performance, financial position, and future prospects. In addition, information should also be gathered about the business environment in which the target company operates. Do you understand what I'm saying? So you can see what I said here, that diligence is a form of what? Is a form of audit-related services. It's not an assurance. And because at the end of the day, you're not going to write a report and say the financial statement is true, choose a true or fair position. No. Your position will be whether the company that is being targeted is viable to the organization or not viable to the organization. That is what you are going to say at the end of the day. I hope you get it. Does anybody have any question? Any question, comment, any observation? Are we good? Any question, comment, observation?
Yes, we are good.
We are good. Thank you so much for your time. Okay. So I'm going to reshare these questions to us for those of us that are just joining on the WhatsApp group so that you can download it and practice it. All right. Thank you so much for your time. So hopefully we are going to meet again. You're going to meet again next week, Sunday, by the grace of God. Thank you for your time. I sincerely appreciate it. So enjoy the rest of the day. Thank you.
Thank you, sir. Have a nice day, sir.
All right.